What if I told you that a 62-year-old with $400,000 in cash could go buy a $700,000 home and never make a single mortgage payment for the rest of their life? Or that a 72-year-old could set up an account tied to their home equity, one that grows every single year guaranteed, and never touch a dime of it? Just let it sit there growing, available whenever they need it. Or that right now 2/3 of the retirement wealth of Americans over 65 is sitting locked up inside the walls of their home. Most of them have no idea how to use it. We're talking about reverse mortgages. And if your first reaction to that phrase was skepticism, that's good. That means you've been paying attention. Because for decades, reverse mortgages had a reputation problem. And yeah, some of it was deserved. A lot of it wasn't. And today we're going to sort out which is which. I'm Scott Kooiman. I'm a real estate associate broker and a mortgage loan originator here in Arizona. And today I'm joined by Richelle Hopkins, a reverse mortgage specialist with over 20 years of experience, and my colleague, Steve Farrington, senior mortgage loan originator with Mutual of Omaha Mortgage. Stay with us through this whole episode because at the end, we're going to show you something about how reverse mortgages can be used to buy a home that most real estate agents don't even know exists. And it could change the way that you think about what's possible in retirement. This is State 48 Homeowner.
Hi, I'm Kenny Klaus, and this is State 48 Homeowner.
I think it's some kind of scam.
Oh, good, a scam.
Yeah, that's pretty much how most people feel the first time somebody mentions a reverse mortgage to them. And honestly, that reaction isn't entirely unfair because for a long time, and we're going to get into the history of exactly why, reverse mortgages did have a reputation problem. And some of that reputation was earned. But here's what I want you to sit with. That same skepticism has existed about a lot of financial tools that, when used correctly, genuinely change people's lives, like VA loans, Roth conversions, even the 401k when it was first launched. The tool isn't always the problem. The misunderstanding is. So let's look at what this product actually is today. Not what it was 40 years ago, not what your neighbor said about it, but what it is right now. Richelle Hopkins has been doing reverse mortgages for over 20 years. And she'll tell you the product hasn't changed all that much, but the people that are using it have changed completely.
So I've been doing reverse mortgages for over 20 years, and the loan itself on how people use it has changed dramatically. I really think it's because education. People are realizing that if they implement a reverse mortgage early on in their retirement years, it will help sustain any other assets. It's evolved. Back when I first got into the business, it was truly meant for the little widow who could no longer make a mortgage payment and she was getting ready to lose her home. And today it's people looking at reverse mortgages before they might get into that situation. They say, wait a second. My home is my largest asset in retirement, and it typically is 2/3 of the retirement assets of people over 65 years old. But they're looking at this asset and they say, wait a second, if I put that in place today, how will that in the long term help protect my cash flow, my other investments, and how can I even live today and pass on a living inheritance to my family? So people are looking at this as more of a strategy today and the strategic way to make their money last them. Cash is king in retirement. People do not have the same ability to go and make the income like they used to back in their working days.
That framing matters because when you hear the phrase home equity, most people think of a home equity line of credit, a HELOC. And a reverse mortgage is not that. The mechanics are fundamentally different, and so is the strategy behind it. A traditional mortgage, a HELOC, a cash-out refinance. They all require monthly payments. A reverse mortgage does not. For as long as you live in the home as your primary residence, you are not required to make a mortgage payment. The interest accrues and is paid when the home is eventually sold. That's the core of what makes this tool different, and it's why it changes the retirement math so significantly when it's used correctly.
Before we go any further, let's make sure we know who this product is actually available to. Because one of the questions I hear constantly is, do I even qualify?
I can't wait to qualify to do a reverse mortgage. Very basic points to qualify for a reverse mortgage. At least one homeowner or buyer must be 55 years old, The home that they're doing the reverse mortgage on must be their primary residence. They're still able to have second homes or still able to travel as long as this is considered their primary residence, and the property must meet minimum requirements. In this case, a manufactured home. We can do a reverse mortgage on a manufactured home as long as they own the property. And there are a couple other details to it. It must be a fix. They must have it as a parcel and so forth. Condos, we can do condos as well. FHA reverse mortgage, it must be FHA approved. We have a whole dedicated team that can work with the HOA on getting that qualified. If they do not meet FHA requirements, we can look at our proprietary reverse mortgage and see if that would qualify. Single family residence all day long, townhomes, patio homes. Yes, we use all of those to qualify you.
One thing worth emphasizing there, primary residence does not mean that you're anchored to the home. You can still travel. You can still have a second home. The reverse mortgage just has to be on the place that you call home base.
And on the credit side, this is where a lot of people are surprised. Because if you've gone to your bank to look at a home equity line and been turned down, that doesn't mean a reverse mortgage is off the table. In fact, it's often quite the opposite.
People are surprised at how easy it is to qualify for a reverse mortgage, especially when they might have went to the bank and looked at a traditional home equity line and they don't qualify. There's a couple reasons why it's easier to qualify. Number one, we're not requiring a monthly mortgage payment. So their monthly income is going to be a lot less on what they can qualify here versus a traditional mortgage. Credit score, we don't look at credit score in a reverse mortgage world. And they can have, say, a 550 or an 800. They're going to get the same interest rate, which is very different than traditional mortgage lending.
That's one of the most important distinctions I want people to hear. In my world, traditional mortgage lending, credit score drives everything. Rate, terms, whether you qualify at all. In a reverse mortgage, that's simply not how it works. The equity in the home is the primary asset that's being evaluated, not your monthly income or your credit history.
All right, so let's say you qualify. You've got a home with substantial equity. The next question is, how do you actually access it? Because this is where a lot of people don't realize how flexible a reverse mortgage can be.
There are three ways that people can utilize these proceeds from a reverse mortgage. Number one, a line of credit. They might say, you know what, Richelle, I really don't need any money today, but I want to set that line of credit up to use it for future purposes. So line of credit, number one. Number two is a monthly payment. And this is where we are paying the homeowner a monthly payment. Basically, they're converting a portion of their proceeds into a monthly payment, kind of like a Social Security check. It just comes in monthly, straight into their account, a monthly payment. The third option is cash. I have a client, for example, that wanted to go buy a second home, so they pulled cash out. We can also use a combination, and this is what gets really exciting in the business, is where we can strategize with the money. They can take a combination of a line of credit, cash at close, even monthly payment. But those are the three main ways how somebody can utilize this equity.
The combination, that's where the real planning power lives. And the line of credit in particular has a feature that most people never hear about until they actually sit down with someone like Richelle or Steve.
The line of credit on a reverse mortgage isn't static. It grows. There's a guaranteed growth rate built into it, which means that the longer you wait to use it, the larger it gets. It doesn't matter what happens to your property's value. It doesn't matter what the market does. That line continues to grow regardless. I want you to think about what that means for someone in their early 60s who is in good health with longevity in the family. You set up a line of credit today. You don't touch it. 10, 15, 20 years from now, that credit line has grown substantially and it's sitting there available for you. No income verification, no new appraisal, no credit check. You did all of that work up front.
I'll never forget my one client, Rick. Rick is the only client that paid cash for closing costs. He looked at it like equity insurance. He said, Richelle, wait a second. My home is free and clear, and I'm in my early 60s. My parents are in their mid to late 90s and actually doing well. And Rick has money in some investment accounts and another retirement account. And so what he was looking at was opening up this home equity with a reverse mortgage to set up a line of credit. His goal is to never touch this line of credit, but there's a benefit of that line of credit that has guaranteed growth. So for him, he just, again, looked at it like insurance. I have homeowners insurance. I have car insurance in case I get in a wreck, homeowners in case my house burns down. But now he has a reverse mortgage securing that equity in his home that it will be guaranteed for him in the future. If he wanted to, when he's 90 years old, take the family on an around the world trip, it is his money to do what he wants within 3 to 5 business days. That money is in his account. What's beautiful about this, we're not going to go back and we're not going to ask for a new appraisal. We're not going to check his credit. We're not going to check his income because we did that when he initially set up the reverse mortgage.
Rick's mindset is exactly how financial planners are starting to think about this product. It's not a loan of last resort. It's a strategic reserve, a secured, growing asset that you have guaranteed access to when you need it the most.
Now, let's address the elephant in the room, because almost everyone walking into a conversation about reverse mortgage is carrying at least one misconception. And often the most powerful one is this: the bank takes your home. It's the thing people say. It's the thing people have heard, and Richelle traces it exactly where it came from.
Reverse mortgages have been around since the 1960s. And when they were originally available, they were done by private lenders. And indeed, you would have a private lender that would say, hey, we will offer you a reverse mortgage. You keep living in your home without making a mortgage payment, but their name would go on title with the homeowner. So what that meant was whenever the client, say, passed away, that private lender, whoever did the reverse mortgage for them, their name was remaining on title, and so they would come in and take the home. That has not been the case since FHA got involved in the late 1980s, implementing the home equity conversion mortgage. But when FHA got involved, they said no longer private lender, bank, whoever's giving the reverse mortgage, no longer can you go on title with that homeowner. You can only be a first position lien, which is what is typical out there today. In any traditional mortgage that you do, the homeowner still owns the home and the mortgage company has a first position lien. And that is the case with a reverse mortgage. In fact, a lot of my clients even keep their property in a trust. They're allowed to have trust on a reverse mortgage. The individual names, they can include beneficiary deeds if they're in the state of Arizona. But the misconception of the bank takes over the home, that is no longer the case, and that hasn't been since the late 1980s.
Then there are the news stories. The one about Miss Mabel down the street who lost her home because she had a reverse mortgage. Richelle has a clear-eyed answer for those two.
Responsibilities of having a reverse mortgage include continuing to pay your property taxes, continuing to pay your homeowner's insurance, and if you have an HOA, continuing to pay those. People would fail to pay and lose their home because they failed to pay their responsibility, not because they had a reverse mortgage. In 2014, FHA implemented the financial assessment. The financial assessment is where we, as a lender, we now have to take inventory of what their income is. What is their history look on their payments of their housing obligations? And they actually have to financially qualify through that assessment. Now, I have had clients that have had some lates on their homeowner's insurance or their property taxes, and I work with them to find out, hey, was there something more going on during that season of your delinquencies? And then we have options at that point.
Delisa is actually a really elegant solution for the right person. If you've had some hiccups in keeping up with housing costs, it doesn't disqualify you. It just protects you going forward. The equity covers those obligations so you don't have to even think about them.
And the third misconception I want to address before we move on, the idea that a reverse mortgage is just too expensive.
When people initially look at a reverse mortgage and the costs that are included in this loan, they initially say, wow, this is an expensive loan. And I respond with, well, what are you comparing this to? If you're comparing this to a traditional home equity line at the bank where the costs are very minimal, yes, this is a more expensive loan. If they're comparing it to selling their house, okay, this is a less expensive option than selling it. But I want people to understand one of the biggest closing costs with a reverse mortgage is the mortgage insurance. And this is an FHA upfront premium that is charged on the loan. This insurance has a few protections that are huge to this loan. Number one, it guarantees that the homeowner can never go upside down. Number two, it guarantees if they set up this line of credit, it guarantees a growing line of credit that will grow no matter what is happening to their property value. So there is a protection put in place with this mortgage insurance that makes this loan a more expensive loan than what somebody might look at instead of a reverse mortgage. And so Bruce came to me. He owns a home, $1 million free and clear, and he needed about $400,000 to go buy this home up in Oregon. He looks at the reverse mortgage and his closing costs were north of $25,000 on his $1 million home. Bruce looks at this and he's like, oh my gosh, Richelle, all I really want to do is go buy a second home. I have to pay that much to get the cash to go buy that. So Bruce was very gracious. He said, thank you so much, Richelle. This is not going to work for me. I get a call from Bruce 2 days later. Bruce said, Richelle, oh my gosh, I looked at the other options. This is actually a less expensive option. Bruce went back to his financial advisor and was going to pull money out of some of his investment accounts. When you pull from your investment accounts, you might have tax implications. You're pulling from an asset that can possibly be growing and working for you. And so Bruce found it less expensive and less risky to go ahead and step forward doing a reverse mortgage on his primary residence, pulling out that cash, absorbing the closing cost with that, and going to buy his home up in Oregon.
Bruce's story is a perfect example of the math changing when you compare it to the right alternative. Nobody should pay more than they have to, but you still have to make sure you're comparing apples to apples. One of the biggest resistance points that we hear isn't actually from the homeowner. It's from the adult children. And it usually comes down to two fears. What happens to my inheritance? And is my parent being taken advantage of? Valid points. Richelle has had these conversations thousands of times.
Most of the times, it's actually the adult children that are telling their parents, do this reverse mortgage. They want to see their parents maintain a quality of life, right? They no longer have a mortgage payment. So what can that homeowner now do that they don't have a mortgage payment? I once had an adult child, a daughter, come to me and say, Richelle, I'm going to look at this reverse mortgage for my mom selfishly because she was the one that was going over 5 times a week to help her mom do meal prep, change the sheets, do light laundry. And so what she did was she looked at the reverse mortgage as this way to open up an income for her mom that now relieved the daughter of doing these things for the mom. And so now they were able to hire somebody to come in and to help do the meal prep, change the sheets, do the laundry. And so it provided a better quality of life, even a better relationship at that point. It provided a quality life for both of them.
That story hits differently than a spreadsheet. The reverse mortgage didn't just change the financial picture, it changed the relationship. And that's the part that doesn't show up in the numbers.
On the inheritance question specifically, I want to address something that comes up almost every time. People worry that doing a reverse mortgage means their kids get nothing when they pass. That's not how it works. And the non-recourse structure of this loan product is one of the most important protections in the entire thing.
The reverse mortgage is due back within 6 months from the last borrower owning the home and up to 12 months, depending on them reaching out to FHA. So I say between 6 and 12 months. At that point, the question is, well, what do we do with this home? If I'm an adult child or a beneficiary and I've inherited this home with a reverse mortgage, what are my options? They're in charge of listing the home. They get their own real estate agent and they look at fair market and they would list the home. They would sell the home, pay back what is due on the reverse mortgage, and walk away with any remaining equity. But here's what's nice about the reverse mortgage. It is a non-recourse loan. So if for example, the market were to crash and what is owed at the end of this loan exceeds what the home could be sold for, that deficit is dismissed because of this FHA reverse mortgage. So the homeowner can never go upside down. They can never pass debt onto their heirs, nor can we go after any other assets. Let's say they're upside down 50 grand and they have 100,000 in the bank, they have another property. We can't touch anything but the home itself for repayment of the reverse mortgage. There is no personal liability. The home is the only thing that would stand for this debt.
Non-recourse is the technical term, and it means exactly what Richelle described. The home is the only asset on the hook. If the market does something unexpected and the loan balance exceeds the home's value at the time of sale, the FHA insurance covers that gap. Your heirs walk away. No personal liability, no judgments against the estate, no touching other assets to make it whole.
Now, here's something that I think builds more trust in this product than almost anything else. And most people have no idea it exists. Before you can move forward with a reverse mortgage, here's a mandatory step that has nothing to do with the lender.
The very first step outside of getting educated from myself as a loan officer that a client must complete as they move forward with a reverse mortgage is a counseling session. This counseling session is about 45 minutes to an hour over the telephone, and it's to educate the client about the reverse mortgage from a non-lender point of view. They want to make sure that they are being told about the closing costs, the interest rates, their responsibilities to do the loan. My goal when my clients go off to counseling and come back, they say, Richelle, what a waste of time. That means I've done my job educating them, but that is not the case necessarily out there with every single loan officer. Therefore, it is one of the very first requirements when somebody wants to move forward is to complete this counseling session.
Think about what that means. Before you sign anything, before you're committed to anything, a completely independent third party sits down with you and makes sure that you completely understand exactly what you're getting into. That's a consumer protection that's baked into the process itself.
And I'll tell you, in 20 plus years of mortgage lending, that kind of mandatory independent review doesn't exist in traditional mortgage product. It's unique to this space, and it exists specifically because of the borrower's profile. This is designed to protect people who have their entire life's equity on the line.
All right, here's the moment I promised you at the top of the episode. We've talked about using a reverse mortgage on a home that you already own, but what about using it to buy a new one? This has been available since 2009. Most people, including most real estate agents, have no idea it exists. And in a market like Arizona, where property values have pushed a lot of retirees out of reach of the homes that they really want, this changes the entire equation.
There are two reasons why somebody may consider using a reverse mortgage to buy their new home. As a real estate agent, let's say that they have a client that comes to them and they have $400,000 cash, and they want this real estate agent to go find their perfect forever home in the community they want. This real estate agent starts to look at what inventory is available, and really it's $550, $600, $650. And this client doesn't want a mortgage payment. So this real estate agent might say, let me introduce you to Richelle, and she can show you how you can take that same $400,000 that you have and go buy your dream retirement home for $700,000 and still not have a monthly mortgage payment. So in that case, the client brings their $400,000 to the table, and then the rest is funded on a reverse mortgage that they do not have a payment on for as long as they live in the home. The second reason why somebody might use a reverse mortgage for purchase is to preserve cash. Let's say that client has $700,000 and they just planned on going to pay cash, but they learn about a reverse mortgage for purchase, and now they can go make a one-time down payment of only $400,000 and preserve that $300,000 and do other planning in retirement. So those are the two main reasons why somebody may purchase their home with a reverse mortgage.
Let me put that in real estate terms so this lands correctly. I work with buyers in Arizona every day, and one of the hardest conversations I have is with retired buyers who have built up significant cash, maybe through the sale of a home in another state, but the Arizona market is pushing them towards price points that they didn't expect. They don't want to stretch. They don't want a payment, and they feel like they have to compromise on the home. A reverse mortgage for purchase means that conversation changes completely. Instead of telling someone to settle, I can now show them how their $400,000 can get them into a $700,000 home. And they walk out of the closing table with no monthly mortgage payment for the rest of the time that they live there.
From the lending side, the structure is clean. The buyer makes a one-time down payment at closing, larger than a traditional down payment, but it's their only out-of-pocket housing costs going forward. No principal, no interest payment required for as long as they live in their home as the primary residence. The loan balance accrues and is settled when the home is eventually sold. And the qualification process is the same as any reverse mortgage. Equity and age-based, not income-based, which means a retired buyer who couldn't qualify for a traditional mortgage on a $700,000 home might qualify for this product with ease.
This is the tool that I think every real estate professional working with buyers over 55 in Arizona needs to understand. Because there are buyers sitting on the sidelines right now who think that they can't afford the home that they really want. And they can.
One more misconception we hear frequently, and this one stops a lot of people before they even have the conversation. The idea that if you do a reverse mortgage, you're locked in. You can't sell, you can't move. You're committed to that home forever.
That's what's lovely about a reverse mortgage is clients still have flexibility. I am a firm believer that a reverse mortgage should be done on their forever home, but things change in life. I've had many clients come to me after they've closed out their reverse mortgage and have had situations changed. I'll never forget Debbie. So I helped Debbie do her reverse mortgage, and 6 months later, Debbie calls me and she's like, Richelle, I'm getting ready to sell my house. What do I need to do? It was very simple to walk her through that, but I said, Debbie, what are you doing? We just did your reverse mortgage. Well, Debbie and her long-term friend at church decided to move into his home and to sell her home. But again, going back to flexibility, that's what's great with a reverse mortgage because Debbie still owned that home. Debbie can still sell that home whenever she wants. She would simply treat it like a regular mortgage, like most of us are used to. She's in charge of selling the home. She would pay off whatever her reverse mortgage balance is, and the remaining equity would go to her and she'd walk away with it.
You own the home. You can sell it whenever you want. You pay off the loan balance from the proceeds, and whatever equity remains is yours. The reverse mortgage doesn't trap you. It gives you options, and you can exercise those options whenever life calls for it. Richelle said something early in our conversation that I keep coming back to. She said that if you're age qualified, 55 or older, you should at minimum get educated about reverse mortgage. Not because it's right for everyone, but because if you don't know what you don't know, you can't make a fully informed decision about your retirement.
I'm a firm believer that anybody who is age qualified, 55 and older, should at least get educated about a reverse mortgage. A lot of people, they might have heard those misconceptions or those stories on the news, and so they do not look at a reverse mortgage. And I say, hey, look, if you're age qualified, get educated. You never know when a reverse mortgage is going to be the perfect solution for you. It might not work out, and that's okay, but at least you know after you've been fully educated about what a reverse mortgage truly is.
That's the right frame. It's not a sales pitch, it's an education, because the worst outcome in financial planning isn't making the wrong choice. It's not knowing that you had a choice at all. If you want to learn more, if you want to sit down and have an honest conversation about whether a reverse mortgage makes sense for your specific situation, reach out to Steve. He'll walk you through everything. No pressure, no obligation.
You can reach me, Steve Farrington, at Mutual of Omaha Mortgage, 480-215-5590, or sfarrington@mutualmortgage.com.
And if you're looking at buying or selling a home in Arizona, whether you're thinking about a reverse mortgage for purchase or a traditional sale, my team is here. Give us a call at 480-354-7344, or you can find us at klausteam.com. And coming up in this series, we're going to keep unpacking the financial and real estate tools that Arizona homeowners aren't using but should be. You can subscribe on YouTube, Spotify, or Apple Podcasts so you don't miss any of this. I'm Scott Kooiman, and thanks for spending time this week on State 48 Homeowner. Go make it a great day. Thanks for spending time with us this week at State 48 Homeowner, the ins and outs of owning an Arizona home. You can connect with us for more information, submit topics you'd like us to further discuss. You can see relevant videos, give us feedback, answer your real estate questions, and more at state48homeowner.com.